Stop what you're doing. Seriously. If you own any semiconductor or tech stocks right now, you need to hear this. There is a massive, extremely common fear among retail investors right now that these severe macro supply chain crunches and skyrocketing component costs are just going to completely destroy hardware margins across the board, right? Like turn your entire portfolio into an absolute graveyard. But last week, I took a step back. I ran the latest earnings numbers and projections for one specific company through 5 robust valuation models, plus Warren Buffett's and Peter Lynch's legendary investment checklists. And honestly, what I found completely shocked me. To hook you right away with a truly contrarian reality, consider this totally surprising statistic: 105%. Right now, the rest of the semiconductor world is facing a crushing existential memory shortage. Competitors are absolutely scrambling. Yet, Silicon Motion just posted an astonishing 105% year-over-year revenue growth. I mean, this isn't just a slight beat. It completely defies the gravity of the current market. Think of it like finding this vibrant, thriving oasis right in the middle of a scorching financial desert. And this is the company we're diving into today, Silicon Motion Technology Corporation. They are the global leader in supplying NAND flash controllers, the vital brains managing the data on your solid-state drives. By the end of this explainer, you'll know exactly if Silicon Motion is a deeply undervalued Buffett buy with an impenetrable moat, or just a Peter Lynch trap riding a temporary cyclical wave. I'm going to give you a clear, actionable framework you can steal to evaluate this yourself. They're navigating this chaotic, supply-constrained market with incredible precision, and their latest results show us exactly how they are pulling it off. All right, here is our roadmap for today. We'll hit their record-breaking financial growth, look at how they are surviving the memory crunch, explore their dominance in mobile and edge, and wrap up with their massive pivot into enterprise AI. Let's get right into it. Part 1. Record-breaking financial growth. Q1 2026 results. Just look at the sheer scale of this beat. They pulled in $342.1 million in revenue. But you know what the real standout is here? That gross margin, 47.2%. They comfortably blew past their own guided expectations, which were sitting around 46 to 47%. Management actually attributes this directly to some highly successful new product introductions, which drove strong profitability with a non-GAAP EPS of $1.58. And as you can see here, this isn't just some flash-in-the-pan recovery. No, this marks their second consecutive quarter of record revenue. We're going from $166.5 million back in Q1 2025 to $278.5 million in Q4, and now breaking out to $342.1 million. I mean, that trajectory is pointing sharply upward. Okay, moving on to part 2, surviving the memory crunch, defying industry gravity. So we've got two highly conflicting forces colliding right now. On one side, there is a massive sequential spike in NAND prices, up 55 to 60% just in Q1 alone. That kind of price shock is absolutely crushing PC and handset makers. But juxtaposed with all that pain, Silicon Motion actually grew their revenue by another 23% sequentially. So you got to ask yourself, how is that even possible? Well, the crucial point is exactly what CEO Wallace Koo stated here. The major memory and storage makers are basically abandoning the lower-end edge markets. Why? Because the massive AI boom demands they redirect all their capital toward high-performance memory, like DRAM and high-bandwidth memory. This huge strategic shift by the big players leaves a giant void in the market, and it's a void Silicon Motion is aggressively filling, as module makers step in and start relying entirely on their controllers. But there's a catch, right? To fill that void, you need actual physical supply in a highly constrained market. Well, because they have spent over 20 years building deep strategic relationships, Silicon Motion has successfully secured NAND allocations from 3 different major flash makers. This right here is a massive Buffett-style economic moat. While competitors are out there scrambling for scraps, Silicon Motion already finalized their 2026 supply allocations by the middle of last year.
Pretty incredible.
Part 3. Dominating mobile and edge. Capturing abandoned markets. Real quick, before we look at the segment financials, let's clearly define what eMMC and UFS actually are. Basically, these are embedded memory controllers. They're the essential chips keeping everything from your smartphone to your smart TV to the infotainment system in your car running flawlessly behind the scenes. So how did this specific segment perform? Their mobile business, specifically those embedded controllers we just defined, grew an incredible 140% year over year. That is absolute hypergrowth in a legacy hardware segment. Now, this growth is totally counterintuitive. Global smartphone units are actually declining by 5 to 10%, and Chinese handset makers are facing severe headwinds. But Silicon Motion? They're aggressively capturing market share anyway. The company is successfully diversifying away from just handsets, pushing these controllers into automotive, smartwatches, and IoT devices. Essentially, they're grabbing a much bigger slice of a slightly shrinking pie.
Finally, Part 4, the Enterprise AI Pivot, Future Catalysts.
To really understand this pivot, you need to know two key terms. First, Montan. That's their brand new enterprise SSD controller platform built specifically for data centers. And second, KV Cache. This is a specialized storage solution optimized for the lightning-fast data retrieval that AI inference workloads demand. So Silicon Motion isn't just making phone memory anymore. They are moving right next to the GPU. In fact, they're already deeply embedded in the AI hardware revolution. They recently announced they are actively scaling boot drive solutions for both current and next-generation platforms of a top-tier AI GPU manufacturer. They are moving straight into the absolute bleeding edge of artificial intelligence infrastructure. And this timeline maps out the aggressive acceleration of that Montan platform. Look at Q2 2026. The volume commercial ramp is beginning a full quarter earlier than initially expected. By late this year, 5 major Tier 1 cloud service providers are slated to begin ramping. And looking ahead to 2027 and 2028, they already have multiple design wins for their next-generation PCIe Gen 6 controllers. The pipeline is just completely loaded. These upcoming catalysts are exactly why management is guiding for another 15 to 20% sequential revenue leap in Q2. Alongside that, they expect expanding profitability, pushing gross margins up to nearly 50%. Plus, with the tape-out of their ultra-advanced 4nm controller coming in Q3, the execution here is incredibly focused. Which leaves us with a massive question to ponder for our valuation models. With their legacy businesses throwing off cash, deep Buffett-style supply chain moats protecting them, and a massive pivot into the enterprise data center market underway, just how high is the ultimate ceiling for Silicon Motion's intrinsic value? It's a fascinating transition from an edge provider to a central player in the AI infrastructure boom. Thank you so much for joining me on this explainer, and definitely keep your eyes on how these enterprise AI catalysts develop over the next few quarters.